Welcome to TheoTrade. This is Don Kaufman. You are joining me here. It is Monday, April 11th, 2016. What are we seeing in today's action? Well, we're just minutes after the close. It's intraday reversal. Actually, both today, being Monday, and last Friday also saw intraday reversals. Now, if you're not familiar with the term intraday reversal, let me start here. First and foremost, okay? Let's go to intraday trade and what intraday looked like. So at the cash open this morning, markets are relatively strong. Yes, the markets open here at 6:30 in the morning. I'm on Pacific time in Scottsdale, Arizona, and it's really freaking early the markets open. So 6:30 in the morning, markets open. We hit the cash highs just about a half hour after that. And when I say the cash highs, during cash markets, that's when all the stocks are open from 6:30 to approximately 1, okay? That's, of course, Pacific time. About a half hour into the cash trade, we hit 2056, right? From there, we did nothing but downside. So some sell-side activity, and that's what an intraday reversal happens to look like. Now, the S&Ps, here we are just minutes after the close. They're now down 7 points. We saw the exact same type of activity last Friday where markets shortly after opening, cash highs, we then faded from them. So kind of zoom back over here just a little bit. Again, same exact action on Friday, almost down to the minute of when we hit the highs and we faded off of it. Just to keep that in mind. So markets are seeing intraday reversals. Now, another interesting area of today's market that should be noted over here. Coming into the trading day this morning, I noticed the expected move was rather light. So you can look at expected move in the S&Ps, okay? And just time out for a second. If you're not looking at expected move, you are doing yourself a huge disservice. In fact, that's actually going to be our Wednesday night coaching session coming up this week right here at TheoTrade. And that's this Wednesday. If you're not familiar with the coaching session, Wednesday, that is April 13th. It'll be at 7 p.m. Central Time. So yes, now I'm quoting Central Time, 7 p.m. Central Time. It's what to expect in the markets. It's understanding expected move and probabilities. One of the most important things, okay, that you can track week to week, all right, month to month, the markets is expected move. It's telling you ultimately what your risk entails. So you might be thinking about, a trade in Google over here. You still have to understand what the S&Ps are displaying risk to be. So as I was saying here, and I'll cover this in much more extent on Wednesday, the volatility this morning was down in like the 13%. Now it's all pumped up. The volatility is all the way up to 15%. It expanded out the expectations of price movement. So we're this morning, again, we were looking in the mid $20 range. The interesting thing, the markets today already moved the expected amount for the entire week, and they did it in one day. Not only that, the volatility is now picking up. So it's a clear sign, all right, risk is coming to play a little bit here. 2 trading days of intraday reversals. So let's kind of continue from there. Great. We saw some, reversals in the S&P. Is this it? Is this the volatility we're looking for? Well, it's still very, very early. And one of the products that I always look for, okay, to distinguish volatility is going to be the XLF. And the XLF, not only didn't it fare poorly today, it did fine. It was up actually 0.4%. So the XLF has a relatively strong day. If you guys don't recall, there was a trade that I set up last week, and I'll kind of recap it here, albeit briefly. And the trade was the Qs versus the XLF, okay? And in this particular case, we were looking at selling the Qs because they were so strong, the NASDAQ, and buying the XLF, okay? So let's see how a trade like this would have fared in the very, very short duration, because everything we're doing here, it's not only for different trade setups, and yes, we will provide here at TheoTrade all kinds of trade setups, but it's also, we got to go back and, reconcile these trades. So if you actually put on the, short the Qs, long the XLF, how would a trade like this be doing in the last couple of days? It's a pairs trade. So here's the Qs. They faded just a little bit. That means they've actually sold off just a bit in the last couple of trading days. And that's precisely when we talked about them. Okay, now let's take this and do versus, if you will. And we'll go in here and add a study. And what study? Compare with. Okay, and we'll compare it to a custom symbol, which is none other than the XLF. Compare with the XLF. Okay, what do we got over here? Well, there's actually what we call divergence and convergence. And to make this a little bit easier to see, we'll take this off candles, put it on lines, right? These two products had diverged from one another. Now they're actually converging upon one another, which is exactly what you would want to see. So right in this area, when I say they had diverged from one another, okay, we were looking again at the idea of doing what? In a particular pairs trade, that's Qs versus the XLF, we were planning on selling what was strong and buying what was weak. In this particular case, here's your primary. We would have sold this, okay, and ultimately bought this. We did just that, okay. Last week, you can see the pair had diverged. They've now converged upon one another very, very tightly. So that trade, it's a success. And I like to kind of reconcile trades from time to time throughout the course of the week. Another trade that we've got on, I've had this on for quite some time, happens to be in Home Depot. That's kind of coming to fruition here a little bit. Finally, Home Depot appears to be showing a little bit of weakness. So this is a trade we've been bearish for quite some time in Home Depot. It's coming in just a little bit. Not enough just yet. And we have about 24 days left, though, on the expiration in Home Depot. So we're finally trending our direction. Okay. Another one that we also mentioned last week is a little tentative on this, but Google. Okay. I am looking for any and all weakness on Google. Google will be the next leg down in the NASDAQ, is going to be marked by Google breaking to the downside. Google is still sitting right in, okay, the 760 range, and it has just been stuck there. Okay, now we're going on a full month hugging 760 like grim death. However, the important point to be made is the Google trade that we set up. Okay, and again, Google, it has earnings coming out. Be aware, the Google trade that we set up was only for 8 days. It's got its last 4 days left over here, and that trade is in the money, okay? And you can actually execute out of it if you followed the Google trades. Again, I like to go through just a couple of trades that we've set up, all right? And there's 3 trades that we set up inside of the last, week. Well, we did the Qs trade, the Google trade last week. The week before that, the Home Depot trade. All 3 of those trades are actually coming in right now, profitable for us. All right. On a broader perspective over here, today, if you're not familiar with it, we actually went out and bought options. Why did we buy options? Not only did we buy them, we bought them in the shortest duration possible. We went out and bought a straddle with only 4 days remaining. That, ladies and gentlemen, is one of the most simple strategies in the market. Buy premium. This is what we call a buy and bail straddle. We bought the 205.50 straddle today. Okay, we paid $2.37 for it. That particular straddle, it's appreciated quite nicely. Things up about 16% on the trading day there. Again, so the position, it's what we call a buy and bail straddle, all right? And by the end of the day, it's up 18% over here. Trade small, trade effectively, and can, again, put on very, very short duration trades. This is similar to what I was talking about last week about buying gamma. Buying gamma, okay, we're going to expand much upon this at TheoTrade in the coming weeks over here. What I'm trying to do in this particular circumstance is just get you used to the idea of buying premium with very, very short time duration, okay? Why? Options decay. We're all aware options decay very, very rapidly the closer you come to expiration. Absolutely. But the gamma that you're buying in here, that is the directional risk, all right? If the market makes a decent size move, these can become very profitable strategies very, very quickly. So what we're going to be displaying over the next few weeks isn't just buying an outright straddle. We're going to buy a straddle, okay? And we're actually going to take pieces of the straddle off throughout the course of the week. This is not intensive all-day type of trading, okay? It's buying what is utterly low volatility, hoping for an expansion in that volatility. And that's really what got us, the 18% gain today is because volatility rose from about 13% to 15%, right? Risk, it's coming out to play. So stay tuned. Again, we're going to be inviting each and every one of you this Wednesday, this Wednesday to one of our coaching sessions. It's what to expect in the markets, expected move and probability. You're going to understand a lot more about strategies like buy and bail straddles. Why do we do them? How do we do them? What makes a bit more of an effective trade out there? We'll even talk a bit more about probabilities in trading and how to effectively use probabilities and number of occurrences in your trading. Again, join us this Wednesday night. Thanks a lot, everybody, for tuning in here to TheoTrade. Have a great evening. Bye-bye.